Hi and welcome to this video. In this video we'll be talking about the charges. What are the charges associated with the mutual fund investment? We'll also talk about the taxation because that also brings your overall return down a bit. So let's discuss the charges that are there for mutual fund investments. Now, one of the charges that we discussed was FMC, which is fund management charge. Every fund would have this, and unless the fund management charge is extremely high, if it's comparable to its peers, then it's okay. But if it's very high when compared to the peers, then you should actually be moving away from that fund and maybe look for a less expensive fund, because this charge would always be there. If the fund is delivering profit, it would be charged. If it's delivering losses, even then the AMC would still charge FMC charges, right? So lower the charge better, and this would be there in debt and equity fund both. Now the second is the commission. So we haven't really talked about it. Actually, there are two kinds of funds when you talk about equity or even a debt fund. So there are some commissions that you pay to your broker when you're buying a mutual fund, and that commission is a charge, and you can do away with the commission. That's the good news. So let me just show you what the commission can do. Actually, it can lower down your profit, and even 0.5% is a big number, as we just saw. It can really make a difference in long run. So if you look here, there are regular and direct plans. So there are two kinds of plans when it comes to mutual fund. One is direct plan and the other is regular plan. Now regular plan would mean that there is a broking involved here, and there's a commission being paid out to the broker. So when you buy it from your broker, there's a commission that you pay, and because of that, the total FMC charges actually goes up because it also includes the commission in it, right? Now if you check the growth, the NAV here is 146. If you go on to the direct plan and click here it is 155. So that means in growth plan, regular and direct, if you compare, the direct plan has a higher NAV. That means here you have got higher returns, not because of the outperformance of the fund manager, purely because in this plan you're not paying commission. And since you're not paying commission, that is being added back to the NAV, and the overall value of your investment is going up, right? So you can see the difference here already, right? That's a difference of nearly 9 rupees on 146. So that's quite substantial. It'll work out to be around 7% kind of a difference, which is quite substantial, right? And this difference is going to grow as the time goes by. So my advice to you would be not to invest in a regular plan. Go for a direct plan, and you'll be able to save your commission. Now there are a lot of apps and there are a lot of websites where you can actually buy a direct plan. You can even go on to the AMC's website to buy the direct plan, so you won't be paying commission. The only difference is that you would have to go on to each AMC's website and buy a direct plan there separately. Otherwise, you can go on to some websites. You can just do some, I don't want to recommend anything, but there are a few websites that you can go on to, and there are a few apps that you can, it's very easy now to actually search for it on google.com. So you can actually do that. The benefit there would be that all your investment would be in a consolidated space. So you buy a mutual fund from Kotak, HDFC, ICICI, all that you'll be able to see it at one place. If you go on to AMC's website, then it'll be segregated, and making a portfolio then would be a bit of a hassle. Right now, I'll show you another example here. Let's say we look at the ICICI Blue Chip Fund again. Here the regular plan is 43, and if you go for the direct plan, it is 45. Again, a difference of close to 5%, right? So this way you can actually save a lot of money, and you go for the direct plan and not the regular one, right? So these are the two charges that are associated. The next one is a big one, which is tax, and that's precisely we'll be covering in our next video.